Okay, double distribution day. This is characterized essentially by two of what we just saw. Okay, so we have if we were to see a histogram, instead of seeing that single hump, so to speak, we see two. Okay, and that typically happens. There's a low level of conviction in the beginning of the day. We don't have enough momentum to really punch through and to hang out at, and to keep ascending in a trend day. We don't have enough momentum to do that. We kind of get stuck at another level. Okay, so this tends to happen when you have two levels. In the beginning, you're kind of consolidating near one. For whatever reason, a news event or some influx of buying or selling comes in, and it pushes you above or below to another level. Okay, so you see the markets hanging out. They jump up real quick and start hanging out at the next level. Okay, so again, consolidation near level. Later, a change of events creates a price correction. Why? For many reasons, and we'll be giving you examples of those, real examples in the markets as we see them. But for whatever reason, we see a change of events that creates a price correction, and the price breaks out into a vacuum zone. Remember, you should be tired of hearing me say this by now, but again, if you are, that means you're paying attention. And that is that breakouts happen into a vacuum zone. Okay, the reason why we call it a vacuum zone is because the price doesn't like to stay there very long. Okay, it wants to jump up above or below to the next level. So again, price consolidates at a different level, and it lacks a conviction to create a trend day. So this is what it looks like with the market profile charts. I really included this only, again, I don't use the market profile charts, and there's a lot of reasons for that. A lot of times they're proprietary, you have to pay extra for them. I don't believe in that. I don't like it when people do that. So I try to trade you guys to see these patterns off the candlesticks charts, but with the market profile charts, it really makes it clear what I'm talking about. Okay, so remember, with the market profile charts, we have a histogram of values. And here's what I'm talking about right here. So instead of seeing that bell curve, we see a bell curve with two humps, right? With essentially two means. Okay, the first guy is right here. The second one is right here. Okay, so those are those two little normal curves. Okay, they're kind of glued together. So the second thing I'd like to draw your attention to is if we remember, the letters tell us the time of day. The later in the alphabet, the letter is the later the time of day. Okay, so we see D, E, F, G, etc. This was in the beginning of the day. With respect to this guy, where we see I, J, K, L, M, N, O, P, right? So in the beginning of the day, we had some consolidation near a level, okay, and then for whatever reason we broke through to seek support at a level below. Okay, so notice this is similar, this behavior here. We don't see a lot of letters here, okay, in this area. This is a vacuum zone. So notice that the price does not stay here very long. The concentration of letters, or those time frames, happen where we have this, where we have the humps, okay, where we have our, little normal curves that we glued together. So again, we see this G, H, I, J, and that's it. Okay, other than that, most of the time can be very well encapsulated in these two zones. Okay, so what that looks like in a candlestick chart is where you have some, this is the initial balance. Okay, we see that formed. We've already seen this example. Okay, if you guys remember this example I gave you when we discussed initial balance. But now we're taking this example and we're kind of clarifying it and really fleshing it out, and taking and applying market profile to it to understand what's really going on. So I see some consolidation about a level, and my first distribution formed here. Then for whatever reason, and actually the reason is quite simple, and that is that we have a gap. Okay, remember that when we have gaps, we often see retracements. Okay, especially if the asset lacks the momentum to continue that trend. Okay, so here we have a trend that wants to form. Okay, we did see this gap, a nice influx of momentum, and then just wasn't able to sustain it. So we have a breakdown here and a consolidation of about a level down here. Okay, so again, some stuff happening here. You know, distribution is formed, knocked down through a vacuum zone, and it consolidates about another level. Another example here, this time with Apple. Notice that, and again, to Jaspreet's question about examples of vacuum zones, here's another one. Okay, I know that the close, you know, the upper and lower bounds of a gap form levels, right? And in between levels, we have vacuum zones. Okay, so here, this is another example of not only the distribution date, but the fact that gap days tend to close. Okay, so we have this breakdown here. We see some consolidation about a level, and we just weren't able to continue that sustained selling momentum. So guess what? We have a you know, a nice aggressive push. We call those the single print, right? Remember, where we see just consecutive price action, and then guess what? We form equilibrium right about this POC right here. Remember, this is like these types of things are like statistical levels. You know, and when we have a lot of buying and selling going through those, they form POCs. So again, we have some behavior here, bought back up, punches through a vacuum zone, consolidates about a level. So any questions about those two examples?
No.
Okay, great. Now, how would you trade this? Any ideas?
No idea.
Okay, well, cool. Because this is a very, very ripe trading opportunity, because this is like a perfect storm right here, just purely technically. We had a gap down. We were not able to sustain it, right? How do I know this? Because in the beginning of the day, the price bounced. Okay, so you see this little V shape here within the initial balance. That's a very good sign if you're bullish of Apple. Okay, why? Because again, you have a gap down. You were not able to sustain that momentum. As you see here, selling volume on the volume side dries up. You already have like 2 or 3 factors in your favor for a long trade. Okay, I do see some consolidation. Again, remember, when you hang out at one particular extreme of the initial balance, you can expect the markets to go that way. Okay, so here I see some selling, buying back, hanging out at the very tippity top of this initial balance, and then guess what? A sustained momentum into this vacuum zone here. This is a very, very high probability trade. Again, it doesn't happen very often, but when it does, this is a very high probability trade, because for all those facts that I told you. Okay, and a great profit target would be at this close right here. We could see that, hey, you know, it actually went further. That's okay. Okay, you know, that's the best complaint you ever want to have is that you didn't make as much money as you could have. Okay, that's the problem I want you guys to have. All right, so if I set my stop loss, or sorry, my profit target here, that's still quite, you know, it's like 1% or more on this trade, you know, and that's how you would go about this type of thing. Again, in the future, I will be showing you examples of these as they happen in real time. I try to do my best to alert you to possible trade opportunities with Squawk, but you know, this is a very, very good opportunity here.